How big of a worry is the trade tariff spat to Wells Fargo and your clients right now?
So to our clients, it's definitely causing a lot of buzz, absolutely. In fact, we start to communicate to our clients to look at 5 key risks around the markets generally, and one of them happens to be trade.
Where does it fall maybe on the ranking? Is it the most, if it's not the most important thing or the thing they worry about the most, what is?
It's probably very prominent. It's most prominent because it overlays into a second aspect, which is around concerns around Chinese growth. Which then also overlaps with slowing global growth concerns as well. So all of these things aren't mutually exclusive. They coincide. And the tariff situation right now, we also had another headline yesterday where the White House was communicating they were going to, in fact, step up the tariffs from 10% to 25% on a $200 billion worth of goods. So this is just another incremental anecdote to that might cause investor concern. But again, these are quantifiable metrics. Once you start to bake those in, we would expect that the investor assumptions and expectations would start to normalize, and that could take out some of the edge of the volatility.
You know, I think we all love to know what the other person is thinking and worried about, right? That's what call-in shows. That's why they exist. So maybe we'll have our own version of a call-in show right now. When your clients call into you, what are they worried about outside of trade and tariffs? What are they asking you?
No, what are they not worried about these days?
And your job is to be paid to worry for them.
That's right. Well, look, our message to our clients and investors in general has been very consistent. We are late in the market cycle, but we're not at the end of the cycle. Doesn't necessarily mean that we're at the end of the cycle. We think there are strong fundamental tailwinds. We believe consumer confidence, business confidence is supportive. We believe that with the pullback that we've actually seen in the markets, that you have a much better balance between risk and reward right now. However, it is the end of easy. And that's something that we're starting to get that message out to clients. And the clients are concerned about, as I mentioned, trade and tariffs, slowing global growth, oil prices declining in a historical fashion, the technology sector and what implications that has, and obviously the Federal Reserve, as your colleague just spoke about.
Well, I think our other colleague and friend, Jim Cramer, would agree with you about the end of easy, because yesterday, listen to this, yesterday Cramer making comments about how we could pop before maybe we drop again. Here's Jim.
Okay. So, trading history, often accurate, but far from perfect, says this move up might not be finished. We could rally another 3 or 4% before the oversold bounce exhausts itself, although already it's gotten less oversold after today.
What do you think about that? Another bounce, perhaps? But the market could be difficult going forward.
Yeah, I believe Jim also referred to that there was no reason for that bounce either, and I believe he's also pointed out.
He was kind of disgusted, actually, about the market.
Classic bear market behavior. We don't believe we're approaching a bear market. In fact, the volatility and the correction that we see, we believe is a return to normalcy. And we like to remind our clients, when you do see a correction, and we saw recently, that bottoming is a process. You know, so we are going to expect to see continued volatility over the coming weeks, possibly even a few months, as the investment community starts to calibrate where their expectations actually are. So they're seeing slower growth, and the range that we're seeing in the market prices is also being
But Kate, Jim will argue, I mean, listen, there's a market of stocks, and then there's stocks in a market, and he will say there's a bull market somewhere all the time. And I think for years we got used to the market going up. You could buy an ETF and you made money. You said it's the end of easy. Is it also the end of that easy? I mean, there are lots of stocks that have done great. You can't just buy everything anymore, I don't think.
Absolutely. So what we like to call the end of easy is also a window for opportunity for the patient investor, for those investors that are grounded against their goals and objectives through their financial and investment plan. And right now, the end of late cycle behavior, this end of easy, we've seen this before. It actually starts to exhibit levels of price dispersion and return dispersion in the market. And that actually sets up nicely for areas like active management, where passive, to your point, has been just running hard. But we believe right now, if you throw caution to the wind and actually keep careful eye on fundamentals, you can actually find some opportunities to invest in. And right now, we're rolling money into equities, large cap, mid cap equities, as well as emerging market equities, which is aggregate in a bear market.